Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Activate your 2-day trial of TWR All Access on the Discord platform. Stay tuned at the end for TWR Hot Products and Services. Monday Madness. Alert update. So unfortunately, I'm going to start off with a loss. We had a swing trade, FCX, over the weekend. It was a $45 call. We pushed it out to 28 April, but instead of taking the pop to the upside, it went ahead and took a pretty dramatic dip to the downside. We were able to cut this pretty much at the bell before it got to the cascading effect, and we took a $3 loss on it. So that's not too bad. I wish this would have gone the other way. However, I will be looking to re-enter this trade closer at the money now that we seem to have found a bottom with this particular trade. So we'll see what the market brings us tomorrow with this particular ticker, as I still like this ticker and I am a fan of this shares long if you're looking to get into the sector for the long term. Now let's talk about some winners. One of our long-term standing traders that we have on the platform, MTA, man, absolutely killed a nice quick trade on a SPY put. The 413 put, 0 DTE. He entered that at 122, came out at 190. That is good for almost about $70 on the day. Here was a couple trades that were absolutely killers. We entered the Microsoft 290 call, 21 April expiration at 173, and the AMD $90 call, 21 expiration at 103. And as you can see by the results, AMD netted us about $60 per contract, and we went over 100 on that Microsoft call. So absolutely fantastic trades right there. For those of you that like that risk and fast-paced trades, check this one out that we did on SPX. Went into that 41.55 call, entered at 240. Trimming out main position at 330, and that's good for almost $100 on the day. And obviously, you bring that stop loss up to break even, and now you got a risk-free trade all day, baby. And who says you have to have a lot of money to make money? Man, at Traders War Room, we got something for everyone and every budget. Look at this. SPY 412 put, entered 68. And boom, right there. I really thought we were going to get the 2X, but we just couldn't push it. But coming out at 115, and that right there is a banger of a trade. And obviously, again, risk mitigation on everything you do. You bring the stop loss above break even, and you have a risk-free trade. No issues right there, baby. $100 to $1,000 per day is possible as a Traders War Room market warrior. So quit wasting that money that's not making money and join TWR today. All links are in the description. Hot off the press. All right, so top news, as you could imagine, the Dow Jones futures are in the spotlight. Netflix and Tesla, huge companies with big anticipated earnings on deck. Also, Bank of America, don't forget about that. But the Dow Jones futures were lower ahead of Tuesday's opening, with the first quarter earnings season set to heat up this week, with Netflix earnings out on Tuesday, while Tesla earnings are set for Wednesday. So definitely big projections, and this could set the landscape for earnings season coming in. We already had a pretty decent showing from the banks. Now it's to see what big tech is all about and how their margins and their price structures and their earnings reports reflect what type of economic situations are in the big mega cap type of companies. So this is important news. So we'll definitely be paying attention to it. And I'm sure to expect some decent lotto trades on some Netflix and some Tesla coming. So definitely keep your eye out for those. Talking about the money, gold rises on dollar pullback, and some clarity on Fed policies are awaiting. So gold prices rose on Tuesday after 2 sessions of losses as the dollar eased, while investors sought more clarity on the U.S. Federal Reserve's monetary policy stance. So it's definitely the Fed and what they're going to do come May with the quantitative tightening and the interest rates and the structures and stuff like that are interesting. Also, on some of the news, if you don't watch the news and you're not paying attention, you should, because this affects the market. There's a bill that's going to be pushed up, and a lot of it's dealing with this debt ceiling, and there's going to be some provisions in it, like a deal on the debt ceiling, but with provisions for some standardized rate cuts coming later in the future. So we're already talking about rate cuts, and we don't even have the recession yet. So there's a lot of quick, things happening all over the place and not a lot of clarity. So that's what it's talking here. I want some clarity with the federal's decision on what they're going to do with the economic status, which directly affects us, retail investors, and how we trade and the type of investments that we get into. So we got to keep our head on a swivel and got to pay attention. I thought this was an interesting story. Casino gaming market size in the U.S. to grow by $13.26 billion from 2022 to 2027. That is huge, guys. So the casino gaming market size in the U.S. is estimated to grow by the $13 billion between those years that we just gave you. The market's growth momentum will be progressed as a CAGR of 4.53% the forecast period. The market is driven by the growth in the spending capability of customers. I want you guys to pay attention to these, okay? There's a lot of those niche type of stocks, but some of the names that would be likely to grow from this would be DraftKings, would be Wynn, would be Penn, and there's a couple other ones that aren't out yet. FanDuel, it's looking like they still want to push for that IPO, and there's some other ones that are looking to get into the space as well. So this is huge, and we need to be able to ride the market. I would think going in leaps on DraftKings would not be a bad idea, specifically getting in shares, holding long. This would be like a 5-10 year type of investment if you got into shares, but getting in the shares while the price is low, you'll probably be able to double X your money within a 5-year period. And getting into some global news, look at this. Taiwan to buy 400 U.S. anti-ship missiles to face China threat. And basically, Taiwan's going to buy as many as 400 U.S. land-launched Harpoon missiles to face rising threat from China. And this is important, guys, because what does Taiwan have that is so important for the future of the globe? Semiconductors, right? 80% of all the high-powered semiconductors are manufactured in Taiwan, okay? We want Taiwan. They want us. We want to have a good relationship with them because we want to be number one in that particular sector when the future of the global is pushing into the artificial intelligence and robotics. That's where it's going. That's where it's headed. And we want to be able to have some say-so and be the powerhouse in there. So we want Taiwan on our side, and we definitely want them to start making things over here in the U.S., and that is pretty much it. So we're going to back whoever we can see that gives us a great opportunity in the future. Not just only that, but it's a great landing point if we get an allied nation for aggression against China. We can have, a jump place to go over there from Japan, hop over to Taiwan, be right there in mainland Asia, be able to kick some ass if we need to. You know what I mean? So definitely that's going to be something that the U.S. is aggressively going to seek after, and we want that. Hot trends. All right, starting out with your market sentiment. Market direction is bullish. The leader index is the IWM. The market momentum is pushing to the bull side, and the hottest sector is real estate. Here's how you SPY did today. We had a little bit of lull going into intraday, but it gave an excellent opportunity to wait out the chop in the beginning of the market and wait for the push from the bottom to have a fantastic increase towards the close. And I mean, that's 411 going all the way up to almost 414, and that right there is winning trades, especially if you catch it in those lulls. Here's your Q index. Very similar kind of price action that you saw from the Q like you did in the SPY. Definitely intraday, you hit that bottom. But again, a great opportunity if you're able to catch those bottoms. Not quite as dramatic as the SPY, but hitting the bottoms of 316 and pushing it all the way back up to 318. That's a good trade if you are able to catch those bottoms. And TWR get you those signals. And as you can see, our alerts, we definitely were killing it today, going short and then going long, trying to kill it both ways, baby. and the IWM. Now, you might have noticed that this was the best out of all the indexes, right? And it's red. So it's like, how can a red index be best? Well, look where it started at before. And you got to go into, of course, market cap. But it was all the way down at 177 at the open, and it absolutely just exploded up, almost peaking at 179. It almost was green. So that is where you get the valuation for the best increase overall as the sector trying to hit the levels that it closed the previous week. Here's all your sectors and basically the big boys that were making the moves and the shakes in each of the sectors. You see Apple ended up red today, barely red, but definitely a down day for Apple. Microsoft had an all right day. A lot of the big caps were green today, which definitely pushed and helped the SPY and the Q. We saw Google kind of take a little bit of a dump, but the thing about Google is if you noticed and you were paying attention to it, notice how it hit that bottom and it stayed there and actually started to increase slowly going into the close. So I do think that it was a knee-jerk reaction on a Google, and we'll be looking for that long trade in Google coming off of the rejection bounce. Here's your top 10 biggest gainers. And guys, if you didn't pay attention to EMPH, man, this thing absolutely just took off from the gates. That was a fantastic trade if you had the time to catch that one, and it was a great one. We're also looking at tech, DLR. Shop is interesting. I like Shop potential where it's at currently right now. Wells Fargo, that's a fantastic trade. We got leap trades in that are looking real juicy, especially if we get a nice push going into the closing out of this week with the bank earnings. And Charles Schwab, we're paying attention to Charles Schwab. Definitely it didn't do so bad on earnings, but it didn't overwhelm. It didn't underwhelm. It kind of just did blah, right? But we're paying attention to Charles Schwab because it did fairly well today. It bounced back pretty good. And this is one of the better stocks that a lot of analysts are saying that is one that you should probably start getting and thinking long-term on. So we're definitely paying attention to that as we close out the week and look towards the future. Here's your biggest losers, and I want you to pay attention to Roblox and STT, okay, and mRNA, all right? Now, we had a poor trade on mRNA earlier last week. We didn't give ourselves enough time. We should have went out a couple weeks because it absolutely was just killing it today with the downward pressure. We knew it was going to hit the downward pressure, but anytime I see these big powerhouses hit the 12%, hit the 12%, 8%, even 6 and 7%, I'm thinking that potentially it's a knee-jerk reaction from some sort of just sentiment riding it down, right? So I'm going to be looking at Roblox for potentially a bounce play. We might get some more downward pressure, and that's fine. If we get some, we can always wait on the trade, but I'd be looking for a potential long position once we find a bottom on that one. And we also got a call on the STT. We push that out until May because we definitely see that as a knee-jerk reaction, and it already made back some of its market share that it lost back just today, okay, because it was looking at like 12% earlier, and we already made back about 4% of that. So this trade's always looking for that reverse trade on the knee-jerk reaction. Remember, this was a new chart that I added into the mix because I like this color chart. It gives you the sector rotations, and as you can see up there in the top, as far as moving well, is the green. You got communication services and you got technology, but right below that you got them consumer staples and the S&P. Now, what I do like about this is it's giving you the spider ETFs that are associated with each of these sectors, and this is the notes that you guys have to do your own due diligence. When you see things like this, the ETFs, you got to dig into the ETFs and you got to find out what is carrying the market space. If your SPY's moving, right? SPY's moving and it's going crazy and stuff. Dig into the ETF and see what stocks are moving SPY so that you potentially can ride in a single sector, a single company rather than an entire ETF, because it might be Apple that's pushing it down. And, say like SPY is moving a 1/4%, but Apple's moving 2%, you can catch that Apple train, ride that 2%, and make hella money, more money than you would make riding SPY for just a 1/4%. Okay, so you got to do some due diligence. You got to be Inspector Gadget a little bit, and you got to be able to get into the books and kind of see what is making things move and where's the money flowing to. Here's your daily sector performance. As you can see, real estate and financials absolutely destroyed it. Energy and communication services were the lagging ones today. And here's a little bonus for you, large insider transactions, JPM getting some insider transactions, and a couple other names that we're not really familiar with, but we're paying attention to them because why? Well, when insiders start making big transactions, it should get us excited. Why are they making this transaction? Why are they buying the stock? Why are they selling the stock? What do they know that I don't know? So we're definitely going to pay attention to COCP and BFZ and Zyme. So those are interesting, and those are things that we'll be looking at when we get into later on this week, seeing if they can hold this pressure or if they get any type of bounce specifically from the large insider transactions. JPN is already on our watch list. We already got plans for that one to absolutely destroy because they killed their earnings and they actually kind of set the financial standards. Wanted to add this in here because Earning Whispers is such a great tool, guys. If you guys don't pay attention to Earning Whispers, you need to get them on Twitter at least, because they push stuff like this that just give you great tools and knowledge for your arsenal. And this is the highest volatility earnings releases. And basically what this is, it's taking the ones that have earnings this week, the high profile ones, and it's giving you the likelihood of the push that's associated with their earnings, okay? And this is what we pay attention to because we want that implied movement, right? That's what's giving us the money. That's what's giving us a dramatic shift. Whether we're in derivatives or we're in equities, we want dramatic shifts if we're trading. If we're investing, we don't really care about this, okay? Yes, we get a run, great, awesome, but we're holding this for a couple years, so what it is today isn't what it's gonna be 2 years from now. But if we're trading, we want momentum on our side so that we can make money either going long or short, and these can give us the best bang for our buck potentially on a binary type of movement that can make us some serious money if we get in at the right time and follow the right direction. And here's your earnings list. And guys, I'm not going to hold any type of surprise with you. These are the ones I'm paying attention to near term. Bank of America, Johnson & Johnson, Netflix, Tesla, IBM, and Morgan Stanley and Goldman Sachs. Those are what I'm paying attention to. Ali is one that I like, but these are the big movers and the big shakers that will definitely push other ones to ride coattails. Bank of America, Johnson & Johnson, Goldman Sachs, Netflix, IBM, and Tesla, and that's what I'm paying attention to big time because those are the ones that are going to move. Other ones will do fairly well as well, and they'll move. They'll make shakes up, down. They'll make shakes down low, but we're definitely following the big money because everyone else is, and you got to follow where the big money's going because that's where you're going to make the big money on those dramatic moves. Give you a little bit of flow. It's basically kind of 50-50. Lean a little more to the bear side, I would say. I think people are cautiously optimistic, all right? Cautiously optimistic. And therefore, if they're cautiously optimistic, they're going to start hedging their longer positions with some puts just in case it goes the opposite way. So leaning to the bear side, and I think the sentiment is cautiously optimistic. Dark pools, you got SPY, of course, leading the way, but look at Q. Q usually isn't about 50% of the SPY, and it's about half on the dark pool, so we're definitely paying attention to that. Microsoft, we're paying attention. Tesla and Apple, of course, got to pay attention to those. So it'll be interesting to see how the market shakes out when that bell rings, and I'll be looking forward to trade and make some money off of some high flyers. Unusual options. What are people doing? You see a pretty good mixture of calls versus puts, and it's definitely these unusual options are big money that are making some big waves in the derivative market, and you need to kind of look at this and be like, why is someone spending so much money on this particular deal? What do they know that I don't know, or what are they predicting? And you can't go wrong more often than not, and it's not 100%, but if you follow the flow of where the big money's at, more often than not, and I would give this probably 7 out of 10, more often than not, you're going to make more money in the long term than you'll lose in the long term. So that's always been an age-old thing. You follow the big money, you follow the flow, and over time, you will be more successful than you're not. And it doesn't work every time. And yes, will you lose money if you follow that blindly? Absolutely. Just like anything, you can't follow anything blindly, but it's a good strategy. You want to understand what is making these things move and why the big investors are making the investment in these, for what reason, and do they know something we don't know? Now, talking about equities, guys, we're looking at implied volatility when we're talking about equities. And why do we like implied volatility? I'll give you the answer. We like implied volatility because this is what gives us our dramatic shift between the intrinsic and extrinsic value, and the implied volatility is what gives us the great opportunity to get in early so that we can get a binary move to make hella money. Regardless whether it goes long or short, if you get in at the right direction, you can make serious money when you have strong implied volatility and it goes the direction that you predict, and you can get crazy gains from just following momentum and implied volatility and getting the best bang for your buck. And these are the top tickers that everyone's paying attention to. No surprise here. You got Myrna. It had kind of a knee-jerk reaction. I got the chart coming up here in a minute on this one. Netflix, obviously, that's going to be in there as well. That's huge money. Roblox, you got Goldman Sachs in their shop, Bank of America, Charles Schwab. All the ones that we kind of already talked about are the ones that everyone's paying attention to, because either they have great momentum moving them continually up and the sky's the limit, or they had some sort of knee-jerk reaction that pushed them down, and people are looking for the potential rejection from the bottom and making some sort of great bounce play to regain some of that cap. So we're definitely paying attention to some of these, and we'll see if we can make some money with some good trades when that bell rings. Stocks I like. Here's how the alerts will go. Purple line, that's the bow zone. That's where the fight is going to happen at. And then the blue line, on a break from the battle zone, that's where we're looking for follow through to the bull side. And the red line is going to be follow through to the red side. All right, starting out, mRNA. Man, I wish we would have gave ourselves some time last week on our trade. We didn't give ourselves enough time, and it definitely made the dump to downside like we thought. So we had the right strategy. We just didn't give ourselves enough time on the trade. But I like this area here. You can see the battle zone and a break to the upside. We can get that follow through to about 150, a break to the downside, and we're looking at 139, even 138. So definitely we got some dramatic shifts that can sway this $5 to either side. So we're definitely paying attention to this, and we like this setup right here. And if I had to bet on this, I would bet that we get a little bit of rejection from this area, try to go retest that higher level, see if we can hold that, and if we fail, we'll come down and we'll see that red line eventually if we can't hold those upper levels. Netflix, guys, this is all about subs. It's all about the ad campaign, and it's all about their forward guidance. And this is going to be a toss-up. This is going to be a true lotto type of trade if we take this. The battle zone's right there. This can shift either way. I got a feeling that they're going to be strong going into earnings anyways. I'll have to look to see when they do earnings. Hang on. So just check, they got earnings after the bell. So this will probably run into earnings. I wouldn't be surprised if we get a nice little pop, and we'll have to play this by caution. So if you're trading Netflix tomorrow specifically, make sure that you're going light. The smart decision, if you don't have the capital back up a trade gone sour, then you probably want to wait. You don't want to trade Netflix tomorrow, okay? You want to wait till you get the news with earnings, and then you want to trade off of that, okay? Either way this goes, okay? If Netflix absolutely kills it and gets the forward guidance, this thing is just going to skyrocket to the upside. If they don't do so well, then this thing's going to come down, and people are going to start looking for the short side. They're going to start profit taking because they've been in this for a while, okay? They've been in this since it was back in the twos, and so they're going to start probably taking some profit, lowering the share down, looking for re-entry points at better prices than it is currently. Roblox, look at that, man. That was a knee-jerk reaction right there. Roblox is one of those that I actually like this trade. I think we get a nice little bounce from this area and probably make back some of that percentages that we lost. I wouldn't be surprised if we break that 401 and we could go towards the 43. Now, I don't know if we have enough juice to actually hold and withstand that 43 area, but I think if we get the break to the upside, we're going to at least go up there and test it and revalidate whether we can hold the area or not. But when I see things like this, especially with a stock that is hugely popular and has that artificial intelligence buzz, this is one of those movements that you're going to start seeing a lot of institutional buying in at this level, and it could spike up the volume as well. So we'll be looking for probably a long call on this one if we break the trigger to the upside. Johnson Johnson, I'm bullish on this one. I got calls on this one. I think this is going to go to the upside. The only thing that worries me is that they come in line with expectations, right? And we have a gap to fill down there in that yellow box right there. That's the only thing, because coming out of this kind of rangy consolidation area, we have room that we can run to the upside and still not peak previous highs. But we do have that area to the bottom where it's a gap fill and it's still not peaking the low. So this is kind of a toss-up, but I'm leaning to the bull side. I think that they're going to do fairly well. I think Johnson Johnson is a powerhouse. They have a great, business overall, and I think their forward guidance is going to be pretty solid. So that's an opinion, obviously, and I'm a little biased because I have calls on this, so I want it to go to the upside, but I'm not taking away from the reality that if it does underwhelm, we're going to go down and we're definitely going to fill that gap. And it could be a gap fill and then a sharp bounce. So we'll see what happens with this one. And I am looking for this to the bull side. So I am bullish on this. All right, another powerhouse financials coming in. Bank of America. These guys are solid, guys. I don't see these doing poorly. I think they're going to kill it going to the upside. Now, they're not as solid as JPM, and JPM really set the standard. So there's going to be a lot of comparisons on what Bank of America has. But this is one of those banks that's too big to fail, and these guys are going to absolutely kill it. All those regional banks that people were pulling monies out of, they were going to the bigger banks. Bank of America just has so many things that it does well and got a lot of money invested in it. So I don't see these guys doing bad. I think that they're able to kill earnings, and I think we'll see a push to the upside. All right, and finally, Tesla. This is probably going to be the most volatile one, specifically with that SpaceX launch that was, scrubbed today. But these guys got earnings on Wednesday, and this will be interesting. Tesla likes to run into earnings, then likes to pull back a little bit, and then depending on the earnings, this thing is either going to explode or it's going to implode. I do like this area here. I think we get to push to the upside. I think a break over that 190 area, and we got a straight run, no looking back to 200, and then earnings will be a tell sign. We'll probably see people profit take just in case earnings come out weak or whatever, and then we'll get our push in after hours, and then that'll determine our push for the next day in the market. So I'll be looking for this one for a bull play, and I do like this, like I said, running in two earnings. And I do think that they're going to do fairly well with their earnings. They have pricing power. There's a lot of pluses with Tesla, and at this price that it is currently, it's still very attractive to the market investors because they know Tesla can easily reach 250 in no time. But they also know that Tesla can also come down to 150 in no time as well. So again, a little, cautiously optimistic on this, but I do think we get the bull push to the upside. Upcoming events. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Activate your 2-day trial today and go to war with TWR. If you're interested in the TWR Investment Club Christmas Club, sign up today because registration is closing on 20 April. You can sign up at this link right here, or we have the link in the description as well. But basically what this is a longer strategy for the club. Normally, we run our clubs for 30 consecutive trading days. However, we've noticed that the current volatility in the market has affected the strategy as far as a risk versus reward standpoint. So we created a 6-month long club so that we can use other strategies that are more effective over longer periods of time, such as covered calls, covered puts, shares, and other strategies like spreads and stuff like that. This particular club will run from 1 May to 1 December, and we will liquidate the account just in time for Christmas. Sign up today to learn more, and also, we will still be running the normal shorter clubs as we do this club as well. So we'll run everything in conjunction because I know some of you like the fast pace of the 30-day trade clubs. The sign up ends on 20 April, so don't wait. And next up, I want you to sign up today for the next class that we have, How to Chart and Trade Patterns. And I'm going to instruct you on 23 April at 1 p.m. Central Standard Time. Listen, all that purchase this class receive the recording. So even if you can't make it live, I got you covered. But basically, I am going to teach you how to chart and find patterns before the big move happens so that we can absolutely kill the market and make hella bank. All you got to do is sign up on the website. Go to traderswarroom.com/upcoming classes. The link is in the description, and you will receive your confirmation email to the email that you sign up with. Basically, we want you to plan for battle utilizing TWR classes so that we can teach you how to make that market bend the knee. I'll see you in class 23 April, 1 p.m. Central Standard Time, and I hope to see a huge turnout because I want everyone to get this training. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.